Good morning or good day, wherever you are. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm talking from the Berlin office from Admiral Markets. We are a big international broker, over 18 country offices, so my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Nenad's or Marco's Day. And on Friday, it's Dirk's Day, like today. So our leading day traders live every single day. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. We have July, and in July we party the DAX anniversary. DAX 1st of July had birthday or anniversary, 30 years. So that's why we have a typical spread of just 0.5 points in the birthday month of July. So much better like you see now, but the usual spread, what we have, 0.8 points, is already great. And now in July to the birthday, even greater. Check all the benefits out on admiralmarkets.com if you like. There you will find also something about our regulatory background and how to contact us. You can call us, you can send us an email or visit the other channels, everything linked on admiralmarkets.com. Enough from my side. Now it's time for Dirk. Hi, good morning, good day, Dirk. What's your view to the markets today?
Yeah, good morning, Jens. Good morning, crowd. Let's share the screen. And typically, let's have a start, like Jens said, into the new trading session on Friday. First of all, what is going on today? Have a look at the economic data first before you place your trades, and maybe you will have a so-called heads up to the 1430 CET data, which is coming up from the US today. So the non-farm payrolls and a couple of other US data is coming up at 1430 CET and might shake the markets again and again. So that well, that needs to be examined, because that could be the first non-farm payroll data where some kind of trade war tariff stuff have effects on that. We will see if that really is the way some people think. First of all, if you have a look at the current headlines of today's agencies, you will see a lot about the trade war, which really ramps up right now between the US and China. At midnight, so at midnight here from the European side, and going back to the New York time, the so-called trade tariffs against China, another packet of those ones, went into effect. Those have a volume of $34 billion, and as you can imagine, China already hits back, and they hit back with tariffs in the same size. Agency said so. Mr. Xi Jinping in Peking, in Beijing, said that Mr. Trump is about to launch the largest trade war in history. We will see what will happen with those, with those tariffs coming from China back to the US, which have effect on 445, something like that, products from the US, and they're going to be sent to China. So in the end, you might have some more information after 1430 CET, if there is really an effect of that on the non-farm payroll data. What is important to watch? First of all, have a look at the current market situation. Market watch. So all our currencies, currency pairs, and indices we might be like to trade. Move sidelining, something like that, because they might be waiting, really waiting on this kind of data at this afternoon. some kind of interesting currency pairs. I already packed them and already started some positions here. You might see that one here. Down here, there's Euro Canadian, Euro GBP, and Euro US dollar. The one Euro US dollar right now into the negative territory, something like that. It's only small position size, so-called mini lots. So nothing like risking a damn load of money in the direction of the weekend mode. So think about maybe positioning yourself with small lots or something like tipping the toe into the water and try to find out if that move is going into the right direction. And if it's not going into the right direction after maybe 10 or 30 minutes, you got to be closing that one and not looking after a lot of losses coming into your direction more and more. So that's the way you should trade it, and do not wait until the loss is that big that you may scratch your head and may load up more. Don't do that. Okay, what is going on with the currency Euro US dollar? We will have a look on that one before we start and to look into other pairs. And just open that new chart window, and we'll be having a look at the current move. Of course, on the daily moves, maybe widening that picture, closing that one at the downside here, and just having a look at the last move. So we'll be checking that, possibly checking it out at a 4-hour chart, possibly a little bit better to get some Fibonacci's from the upside to the downside here, and we'll check that out if that is the correct number. Open as the high is 117.20. And the high is 117.1836, so that's correct. And we will be looking at the so-called projections, Fibonacci projections, and there are a couple of them, like the usual ones, the 138.2 and the 161.8, where this might be heading to if the non-farm payroll data is weak, and would be some kind of helping the euro to get a more relief rally. On top of that, besides that non-farm payroll data, you will be having a look on effects with Brent and WTI crude oil. So what has it to do with the euro-US dollar rate? You maybe scratch your heads. Yes, you may be right. What is this guy talking about? Why is it usually going up when the oil price is or might be going down? That's nothing like the typical correlation you might think. Well, you're right on the one side. On the other side, on the short-term effects or short-term to mid-term effects, it could be the way that with sinking oil prices, the so-called inflation is kind of a little bit of flattening, the US inflation I'm talking about. So the US inflation is kind of flattening, or maybe running to the downside a little bit, so let's say 10 or 20 basis points. So that might be having an effect on the Fed targeting the next rate hikes. So maybe they might be not hiking 2 or 3 times this year. Maybe they're just hiking 1 or 2 times more. So that might be having an effect, of course, on the euro-US dollar currency pair, just because the rate differentials are not that big like the market anticipated. So that's maybe just one way to think about it. On the other side, you may have a look at the current discussion. So the current discussion at the ECB. So ECB officials are talking about possible rate hikes, earlier rate hikes, because they simply are a little bit of afraid that they might hike too late. So that's the talk right in the last, let's say, 24 to 48 hours. Some ECB officials have been talking about the December rate hike. I'm talking about December 2019. So that might be too late, they said. So possibly something will be happening in direction to September, or even if it is really possible, between July and September. So that might be the first ECB rate hike. So if you now are shouting something like, hooray, the first rate hike of the ECB, calm down, you may expect too much. The first rate hike of the ECB might something like 10 basis points, so that means 0.10%. So the official rate of the ECB might be lying around 0.10% between July, September, or even December. Money markets right now still are pricing in that kind of a rate hike in direction December 2019. So that would be a little bit of a surprise to be on the earlier side. But if they really do it, you will see that the money market pricing, and it will be going back to July 2019 or September 2019 immediately. The other way, which you have to observe when you're trading euro-US dollar, is of course the Federal Reserve rate hikes, and the money markets and the future markets are pricing in that rate hikes in the next month up to December 2018 in direction 2.00 to 2.25%. So the effect on that one is something between of a probability between 70 to 80%, still 70 to 80%. That is kind of a rate scenario happens with two more rate hikes until the end of the year. So we'll be seeing how many effects we'll be dealing with that one. First of all, this kind of a sell mode here is at 117.15 scenarios and has a really small stop loss scenario, so that's it's not really much, as you can see with the red line here, and it's going back possibly, so that the first target of that one should be the 61.8. That's the one here, which is around lying around 116.50s, or to be correct, around 116.46, like it says here. Okay, so talking about the last week's Friday. I'm always doing that like a little bit of not of a storytelling or cheering how good the trades were, just where we stand, what happened. We were speaking about the gold trade. We drew this kind of blue box, as we always do here, and I said about that last low of December 2017 that might be a next target for the bears, and so-called short covering will be taking place around that scenario. That was exactly the way it behaved. So it went up quite rapidly. You see that one around 1,236 until 1,256. So $20 in a really 2 days mode, quite quick, and maybe quite a nice kind of a trade setup. We have been talking about the Euro Swiss franc. Again, we drew that blue trading box where we said that it might be having a relief rally and might be going back up to that 117.60, 61.8 Fibonacci. The first target we spoke about was that 116, 10 or 116.20 is around that, where the 38.2 Fibonacci is lying. That one came from the last high here around the 120 markers and down to this last low here, so that the Fibonacci retracements are the next targets up the road. 50% would be around 116.80s, and 61, as I said, 117.60s. So possibly, again and again, talking about those rate differentials between the euro and the Swiss franc, you got to know that the Swiss franc is still with a negative interest rate. We are talking about the Swiss National Bank, which is hovering around minus 0.75% with the interest rate. And as you know, ECB is 0.00. So there is a positive rate differential between those two currencies and favoring the euro. Even if you think about the fantasy which is coming up in the euro right now, if we think and talk about the next setups into rate hikes into the next year, 2019, as I said just a few seconds ago about euro-US dollar. Okay, so then we spoke about the bond future. Going back to the daily, just having a look at quite interesting levels. Again, like this Fibonacci setup told you, going up to the spike here, and checking out the 61.8 level. Checking out that line here, that might be around 162.40s almost, which always broke up to the upside. And the next line, which is very interesting, is the old spike level of 164.18. As I said last week, the next target might be the 163.98. That's another Fibonacci level from the long-term analysis, as I did that in the last Friday. We spoke about the Deutsche Bank share. and suddenly look at the Deutsche Bank share. It actually went into our target zone. We spoke about last Friday, where we talked about maybe just giving it a little bit of a relief to the downside and then start buying it. This morning, you got to know that, of course, there are some news around that. You won't have a Deutsche Bank share jumping that way without any kind of news. So this morning, a couple of news agencies spoke about JP Morgan and the so-called ICBI, so the Industrial and Commercial Bank of China, might be getting interested in having like a little bit of a share of the Deutsche Bank company. So they might be buying it, or might be buying it something like you always know that like the bigger shareholders like the Arabian shareholders or the Chinese shareholders from H&A. So they might be stepping into that. So right now that's not 100% clarified, but you will be seeing that in a couple of hours or even a couple of days if there is something 100% real with that one. If this is really the fact, you see the next targets to the upside as marked with the Fibonacci's here, 1030, and the old level of the 100 Fibs, which is around 1080s. Might be getting some kind of a relief, a really important relief, very much needed in that kind of stock, and not even for the stock market, especially because the Deutsche Bank is kind of too big to fail. If there's some serious problems with that one, we have another Lehman crisis. Going to another currency pair, as I opened that one, you saw that at the beginning in the terminal, a mini lot as well. Sell mode again, as I did that via Twitter, my FX Dirk Twitter account, a couple of days or even running more than just a week. This is very kind of a boring trade. Last days, nothing big happened. Something like this kind of behavior in the currency pair is always very dangerous, because there might be some kind of explosive movement into the next hours or days. So you're not sure what is going on with Brexit. Still, this political kind of uncertainty. The Brits don't have anything like a clue what they are up to. Do they have a soft Brexit or a hard Brexit, or do they have any clue about that kind of stuff between the negotiations between London and Brussels? So a lot of quotation marks, a lot of question marks, which are very important for that kind of a pair, and of course, which are very important for the trade between those two areas, between Great Britain and the rest of Europe. Where could this kind of currency pair head to the upside if that kind of trade here doesn't work? You see the so-called pivots, the Admiral Market pivots. You can enter that one with a navigator. For those who don't know that, you got the navigator here in the MetaTrader, and later on you can see that stuff like all those Admiral tools. They session, don't you, and gravity high, low, Keltner, whatever you're looking for, and you will find the Admiral pivot as well right here, or Renko charts and stuff like that. So if you can't do that, just ask the help desk. They might be helping you out with getting that into your trade station in your trade platform. I spoke about the possible, let's say targets to the upside. The worst case scenario is if there are really some negative political news about the Brexit, about the current status of the negotiations. There would be some kind of, let's say a spike or a spike movement into that 090s, 09040s territory. That might be a kind of an overshoot to the upside. It might be another, let's say, way to have a nice short entry, or something like an invitation from the market to get a new short done. You should never be the stop loss scenario with 150 and more pips in that trade, because otherwise it can kill you to the upside. Right now I think it's just to favor a small stop loss scenario, and if that is going to be stopped out, you might try that stuff again between the resistance 1 and resistance 2 level, which is around the so-called 088 70s and 088 90s. So that would be another scenario. Okay, so let's go to the DAX. We got the DAX this morning trading around and hovering around between the 12,500 markers. So this morning, as the German DAX opened, in the very early sessions, we had markers around 12,540s. And suddenly going down. What happened yesterday was very much important, some kind of a speculation or on a move that the USA versus the European Union might get something like a deal done, that they might be having no tariffs for European cars in the US. But Mr. Trump, of course, said that there might be the deal with 0 tariffs on American cars into Europe as well. So, of course, Germany is not the partner to negotiate that alone. It's the European Union. And Mr. Trump, of course, knows that, but possibly he's some kind of trying to spread or trying to separate a couple of negotiators between France, Germany, and other countries. Might be some kind of his way to implement some kind of a pressure. Well, that's kind of negotiation tactics, and I'm sure he's able to do that. Okay, what is going on with the next scenarios? We still have the Fibonacci tools from the record high to the last low, and most important marker to the upside is still the 61.8 level, which is coming up around the 12,860, 12,850s. So that might be something like this typical make or break scenario. If we get back up, then we will have to discover to get back above that 12,850s, 860s. What is going on with the next days and weeks, especially important for the German DAX, not only from the chart technical aspects, but on top of that from a couple of economic data, because next week the US earnings season is about to start again. If you look at into the next week, you will be having data like the big US banks like Citigroup, like JP Morgan, Chase, and Wells Fargo, which are about to start the earnings season at Friday in the afternoon. So this might be giving you a hint where the next days, weeks in July are heading to. Very important to say is this move from yesterday is nothing like sustainable if with nothing like those negotiations with the trade tariffs are going on, and if nothing is about to, let's say, to be getting solved, and if it's not going to get solved, then we will be having a couple of big problems. You already saw that how German car makers like BMW, Daimler, or Volkswagen went down, and a couple of those companies who are working for them, let's say something like from the MDAX, so the mid-cap, like Osram or like Hella or other companies producing a couple of things for car makers, and they all will be suffering. And yesterday, for example, this is something like where people should be aware, oh, there's something happening. Yesterday we heard about the German car maker Opel, which belongs to Peugeot meanwhile, or about Volkswagen, that they might be thinking about reducing workforce, or let's say send them into a couple of days into holidays, or into some kind of German working law possibilities, which I don't know to translate it right now. We just talk about so-called Kurzarbeit, which is short time work. So this is the thing about when you're thinking about things like that, you might be scratching your head and saying, oh, so they have to do it, maybe because a couple of clients or a couple of possible clients are not asking after German cars right now, or it's getting, or they produce too much or something like that. So it's in the end, it's a negative story, and that might be something like going into the real data in the next days and weeks, which is more likely to go to the downside than to the upside. Just my saying.
Time is always our limit. Our goal is quick and smart for the daily. So I already will say thank you for today. Tomorrow is another day, but there's weekend. So have a nice weekend. And the next business day is on Monday. And there you will enjoy JMedvo if you like to do so. Greetings from Berlin office. All the time good trades. And the last 30 seconds maybe now from Dirk. And yeah, all the time good trades. Best. And the last words from Dirk now.
Yeah, last words. I'm really quite fast, Jens. I'm trying just to say to that Euro Canadian here. Just have a look at the Canadian dollar. Not only the Euro Canadian pair. On top of that, the US dollar versus the Canadian. Why I'm saying that? When oil prices are sinking, when oil prices are going to the downside, more to the downside, you will be having a look at the Canadian dollar, because the Canadian economy and the Canadian dollar is very much kind of a, let's say, seismographic stuff, like for the oil markets. So the oil price is going down. That means the Canadian dollar mostly is going down as well. So that might be a nice currency pair to watch as well. I wish you a happy weekend. Good trades, of course. Pay attention at 14:30 CET with the non-farm payrolls today. And of course, have a relaxing weekend. You'll be hearing us the next Friday at 11 CET here again if you like. Thank you. Bye-bye.